Ladies and gentlemen, good day and welcome to Midhani Q2 FY26 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikas Singh. Thank you, and over to you, sir.
Thank you, Shravani. Good morning, everyone. On behalf of ICICI Securities, I welcome you all on Q2 FY26 Midhani results con call. I would like to thank the management for giving us the opportunity to host the call. From the management side, we have with us Mr. Director SVS Nayanamurthy, Chairman and Managing Director, Mrs. Madhubala Kalluri, Director of Finance, and Mr. Padavittan Babu, Director Production and Marketing. Without taking any much time, I'll hand over to the Chairman, sir, for his opening remark. Over to you, sir.
Thank you. Good morning to all of you. Hearty welcome for Midhani's Q2 FY 2026 earnings conference call. This is Narayanamurthy, CMD Midhani, and with me present today are Srimati K. Madhubala, Director Finance, and Sri P. Babu, Director Production and Marketing. I am also joined by Mr. P. Rao, AGM Finance, and our Company Secretary, Mr. Paul. The detailed financial results for the quarter and half year ended has been disclosed to stock exchanges. However, I'd like to take a few minutes to highlight some of the key figures from the results. Midhani has achieved a turnover of 209.73 crore during the second quarter of FY 25-26, against a turnover of 262.1 crore recorded in the corresponding period of the previous year. For the first half of FY 25-26, the turnover is 380.22 crore against turnover of 425.57 crore in the corresponding period of the previous year. Value of production during the second quarter of FY 25-26 stood at 256.38 crore, and VOP for first half of FY 25-26 was 497.67 crore, registering a growth of 3.9% against the value of production of 479.01 crore recorded in the corresponding period of previous year. In terms of profitability, profit before tax during the second quarter of FY 25-26 was 19.13 crore, and the profit before tax during the first half of FY 25-26 was 38.12 crore. Profit after tax during second quarter of FY 25-26 was 12.77 crore, and the profit after tax during the first half of 25-26 was 25.58 crore. There has been a decrease in the top line performance on the year-on-year basis. However, there is a year-on-year increase in the production, and there is no decrease in bottom line performance with respect to EBITDA and PAT margins. The EBITDA and PAT margins for the first half stood at 21.82% and 6.73% respectively. Additionally, the order book position remains robust at 1869 crores as on 1st October 2025. This gives very good visibility for FY 25-26 and beyond. One of the important developments that I wish to bring to all of you is that Midhani has entered into Memorandum of Understanding on November 10, 2025 for creating a metal bank at Midhani to ensure uninterrupted production and supplies of projects of national importance. You all know that we import a number of raw materials, and there have been instances where there were supply chain interruptions, and due to which we could not book some of the exports because of the non-availability of some of these raw materials. And this MOU was outcome of Ministry of Defence vision, and considering Midhani's strategic importance across all strategic sectors, this initiative was taken. And another important thing is we have signed an MOU for a bulletproof jacket. Its name is Abed, and it is a technology developed by DRDO and Indian Institute of Technology, Delhi. And this will significantly increase the forthcoming order set for bulletproof jackets. So with this brief introduction, I now request the stakeholders for their questions. Thank you so much.
Operator, please announce the Q&A session.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait while the question queue assembles. A reminder to all the participants that you may press star and one to ask a question. The first question is from the line of Henan from Equicorp. Please go ahead.
Thank you for the opportunity, sir. Sir, I've got a few questions. So with respect to the decrease in revenue, sir, could you give some further explanation? Because we've also seen an increase in our inventories. So is it some orders that have actually slowed we've actually delayed or deferred the shipment, which is why the inventories have also built up and the revenues have also gone down?
Okay, just to give a small brief, the Mithani has order books for predominantly three varieties of materials. One is steel, second is superalloys, and third is titanium alloys. And the processing time from the starting of the melting to booking sales, it depends on the nature of material and orders we are executing in a particular quarter. Typically, steels take about 2 months for processing from melt to the book sales. And superalloys and titanium alloys, particularly superalloys, will take longer time for processing. Nearly 4 months it takes. So sometimes what happens is even if you start producing in one quarter, we will not be able to book sales in that quarter. So it will get booked in the next quarter. That is the reason why you have even though value of production has gone up, we were not able to liquidate in the previous quarter, which we will be doing in the current quarter. So that is a basic thing. And there are many superalloy grades which we have melted in the previous quarter, which are under processing, downstream processing like rolling, forging and other things. So that is the reason why you are finding that decrease in the sales.
Okay. So also if you could, you're on the status of the advanced ultra supercritical thermal project. So there was, the budget has actually released some funds, but I think so it's still moving very slowly. So for the demonstration plant that BAIL and NTPC were going to do it in Bilaspur and then about 50 gigawatts was guided. So how is the progress out there? Because I think so even orders for us have slowed down.
Yes. See, Mithani is very proud that we are the people who have developed one of the grades of nickel-based superalloy. It is called a 740 grade superalloy, and it is a nickel-based superalloy. In collaboration with Indira Gandhi Center for Atomic Research and Nuclear Fuel Corporation, Hyderabad, Mithani has successfully melted the material. It has been processed into the tubes. So, and an order for these tubes have been already, it has been tendered by BHEL, and we are hopeful that we will be a part of the tube manufacture, the raw material supply to the tube manufacturers, because one of the conditions that was put is only tube manufacturers can participate in the tender, in the BHEL tender, and whoever is the tube supplier, Mithani will produce this material and supply, because this is a special grade that is required for the processing of steel, and only Mithani can make this currently in India.
So if you actually look in the nutshell, so our non-defense order book is actually getting a lot of traction in the space, nuclear energy and the thermal energy side. So how should we look at the ratio? Because it used to be 80-20, 80% defense and 20% non-defense. So how should we see as these projects start actually picking up? And if you could also give the potential of on the thermal energy side, nuclear energy and the space projects for Mithani?
Yeah. So actually, if you look at our order book, 70% of the orders are from defense, and our total order book as on today is 2,220 crores, out of which about 70% of the orders are from defense. 20% are from space, and about 10% that includes energy and others, current standing. So we expect the contribution from energy and others also to increase.
So if we look 2-3 years down the line, how would this mix change for us? Would it be more of a 60-40 ratio or probably a little more?
Yeah, we expect at least maybe 10 to 15% maybe exports in the coming 2 to 3 years. That is what we are expecting. And there will be increase both from space as well as others. Energy we are expecting, because once this order fructifies, the ultra supercritical order, that will have significant increase in the energy side. Okay, so we are expecting that defense to little come down and that space being occupied by energy, exports and space.
So lastly, before I get in the queue, so if you could also give some more understanding and clarity on the abate part, because we already have a power jacket and it didn't really pick up because, of the weight. So abate use, in the last call you said it is for certain very strategic use also. So what is the kind of potential you are seeing, and is it like a technical textile base where you'll actually compete with the technical textile players on this particular piece?
To be frank with you, Abase is the real technology. Okay, actually, if you look at Midani has entered into this armor business more than 20 years back. Slowly, the nature of armor has come down from using some steel plates to ceramic plates, and there are what are called soft armor and hard armor. That combination gives the best protection levels for the bulletproof jackets. So this particular technology, as you mentioned, we already had Baba Kavach technology. But the level of protection, the weight of the body armor is significantly lower compared to the other things. This is the lightest bulletproof jacket that currently is in existence. So we have taken this last Monday. We have taken the TOT from IIT Delhi, and this will be the future technology for all the bulletproof jackets. It is having one of the lightest bulletproof jackets and with highest protection level. Okay, so we hope that we will be in the thing, and other people who are textile manufacturers and all, this is a different kind of thing altogether. Abase is going to be a game changer in the bulletproof jacket business, and hopefully we are hoping that we'll get significant number of orders for this particular Abase jacket.
Thanks a lot, sir, for the answers. I'll fall back to the queue.
Thank you.
Thank you. The next question is from the line of Nishita from Sapphire Capital. Please go ahead.
Yes. Hello. Am I audible?
Yeah, audible.
Can you give a revenue mix between the three varieties that you just mentioned, that is steel, super alloys and titanium alloys? What is the revenue mix between these verticals?
Okay. So if you look overall, I can give you the figures. So super alloys, for example, we have 25. So we have total percentage of super alloys is 21%. Titanium alloys is about 19%. Marine steel is about 15%, and special steels is about 37%, and all other grades minus all the above 4, it comes to about 80%. So this is the revenue. 8%. So this is the in terms of revenue. Our product mix, alloy wise revenue.
Okay, understood. Thank you so much. Also, my next question is, you earlier guided to reach 1,300 crores in top line for FY26, and we've had a degrowth in H1 FY26. So, are you still confident that we'll be able to achieve the 1,300 crores of top line and EBITDA margin guidance of 23 to 25%?
Yes. Our target is to reach 1,300 crore, and many of the things, as I told you, they are under WIP, and we will be processing in the Q3 and Q4. We will be working harder to reach the target. Target has already been fixed at the starting of the year, and we are moving towards that. Both for EBITDA as well as the top line will be maintained as per whatever we have told earlier.
Okay. Okay. Understood. And what will be the growth drivers for H2 FY26? Because to reach 1,300 crores of top line, we need to have a minimum of 40% of growth year on year in H2. So what are going to be the growth drivers?
Yeah. The growth drivers will be the super alloy business and titanium alloy business. These are proportionately we have a higher revenue from these two things. And incidentally, I wish to inform you that we have 600 crore worth of titanium order book currently. So we'll be executing them and to reach that 1,300 crore business. And we have about 450 crores of super alloys orders currently. So that itself is exceeding 1,000 crores of order book. So by executing these things, we are confident that we can meet the targets.
And it takes about 4 months to execute these orders, right?
Yes.
Okay, understood. And do we have any order pipeline? Like, are you bidding for any further orders? What does the order pipeline look like?
Yeah. So current order book is about 2,200 crores. I told you already. About 500 crores worth of orders are in pipeline where we have already participated in tenders. And by March 2026, we will be able to realize this 500 crore orders.
Oh, okay. Thank you so much.
Thank you.
Thank you. A reminder to all the participants that you may press star and one to ask a question. The next question is from the line of Abhishek Kumar Jain from Alpha Accurate. Please go ahead.
Thanks for opportunity. Sir, apart from the 21% growth in the top line, you had also guided significant expansion on the margin side, also 300 to 400 bps in FY26. So are you still intact with that guidance?
Sorry, we didn't get you. Like are you asking that our margins and EBITDA and all that at what level, sir? It will definitely be at the previous years. Previous year, like it will be, we are expecting around 23% EBITDA margins overall during the year.
So in the first quarter, you had mentioned that you are looking for that 200, 300 bits of the margin expansion in FY26. But if we see the second quarter numbers, there is a significant dip on the gross margin and EBITDA margin. So just wanted to understand, are you still intact with that target?
Yes, actually, as we mentioned, that reasons for the decrease in the revenues, even though we have done the production, but certain productions which are at the final stages and all, where the revenues can be seen in Q3, number one. So because the revenues have been decreased, though the percentages looks like, but if we look at the EBITDA margins in terms of revenues, the EBITDA, PBT and the PAT levels, all the three at par with even the previous year. And as we mentioned that the overall expectation of 23%, which we are expecting the EBITDA margin, and since our targets, we are again still targeting for 1,300 crores, and we are putting efforts to reach that and all. Definitely once 1,300 has come, 23% EBITDA is not an issue, and it will definitely come. We are confident of that.
Okay, sir. And how is the current composition of the raw material sourcing, virgin metals versus scrap?
Metal bank. Yeah. With respect to metal bank, yes, we are using something like more than 20 types of raw materials that go into the production of the nickel-based super alloys and other special steels. We import them because that kind of high purity raw materials are not available in the country. And so we had discussion, Ministry of Defence has initiated a program by which we should have self-sufficiency in the raw materials. So we have identified some 6 critical raw materials that are supposed to be stored in large quantities, which are essential. Okay, so we are going to create a metal bank with the 6 raw materials with support. Already we have signed MOUs. So maybe coming 6 months to 8 months, we will be able to have this metal bank in the campus of Midani at Hyderabad, and that will ensure uninterrupted supply, because some of the times, even lack of one element in an alloy is going to create a problem. We cannot take the melt because we cannot process the material, even if one element is not there. So with respect to that, this initiative has been taken, and this is a very important initiative to have Atmanirbharta of Government of India. So this is the initiative that is taken. And last Monday we had a exchange of MOUs in the presence of Honorable Raksha Mantri.
Okay. And sir, if you see the historical trend, your inventory increase is higher than your net sales numbers. So just wanted to understand that how much you are ready for the recycling and reusing the alloy scrap and increase the usage of the scraps in your overall productions.
Yeah. So actually, in any processing of material, generation of scrap is inevitable, because the product has to be made, and there will be, during processing of material, there will be losses and there will be generation of scrap. And this scrap goes back into production, and when when the production is more scrap is generated. Okay, so how much of the scrap can go back and how to reduce that we are thinking, but we are not allowed by certain customers to use more than certain minimum quantity of scrap, because there are certain requirements. For example, Gaganyaan applications of ISRO, we are allowed to use only certain amount of scrap, and it all depends on product mix. If the customer is saying that I want virgin material, we have to use pure raw material. So typically the ratio of the virgin material to scrap will be in the ratio of 60% to 40%. So sometimes when huge orders are there where virgin materials have to be used, scrap generated cannot be put back into production line, and there will be accumulation. But we are continuously thinking and trying to understand how we can put the scrap back into operation, and we'll be reducing. It all depends on the product mix and that we are processing in a particular year or particular quarter, and you can see the up and down in the scrap utilization or accumulation. So this is a brief thing for your question.
Okay, sir. And sir, you are also involved in the Kaveri engines manufacturing program. So just wanted to understand the outlook of that and how much, what would be the role of Midhani in overall?
See, Midhani is a 52-year-old plant which is having expertise of more than 40-45 years in the production of super alloys and titanium alloys. The essential elements that go into the manufacture of a aero engine are super alloys and titanium alloys predominantly. Okay, those hot sections will be super alloys and the lower temperature sections will be titanium alloys. And we have both the things, and Midhani has continuously supported this Kaveri engine program, or in the futuristic upcoming programs, whatever programs are there under Government of India. We are continuously striving to develop new grades. Recently, in fact, some of the grades for one of the aero engines of a public sector undertaking we have been cleared. Midhani has been cleared for productionization by CEMILAC, on the certifying agency. So there are continuous efforts to make newer alloys and producing them and getting certified and supplying to the customers. So these are continuous efforts because large number of grades are used, and these grades can be made only in Midhani because this kind of technology are available, the kind of facilities are available in Midhani. So we closely work with our customers to develop these grades and get them qualified. And we do internally a lot of research for each of these materials, and we are with our aero engine manufacturers. Yes.
Okay, sir. So if I see that your long-term outlook that you are involved in the ultra-high temperature supercritical power plants, the Kaveri engine programs, and so many defense programs, so just wanted to understand what is your revenue guidance for the medium to long terms, because that if I see that revenue growth in the last 5-6 years, it's not very up to the mark. So just wanted to understand as an investor point of view, that what would be your revenue target by FY13 or FY28?
Yes. No, it is like this. We are having certain kind of facilities currently we are operating, and as your point I appreciate. Okay. We are having a lot of plans for increasing our revenues, and we are having strong capex plans. Okay. And we will be targeting every year at least 10% growth. Okay. And we have ambitious capex plan where we can install some new equipment to cater to improve the productivity basically. Okay. So some of the older equipment we are replacing it, and by utilizing the capex and installing new equipment, we expect our growth to be 10% year on year.
So, sir, defense is an emerging sector at this point of time, and everybody is expecting very strong growth. Every company is growing well. Growth rate is very high. So, in that case, as you are involved in the many programs, just taking the 10% growth, is it not very much conservative from your side?
Yeah. Yes. See, basically it is like that. By the time, once we install the new facilities, we expect it to be higher. On a very conservative note, I am revealing this 10% figure. Yes, we want to have better figures. In the coming years, you will see a bigger growth.
So can we expect that a 20% plus CAGR growth in the next 3-4 years, because there are so many programs?
Yes, once our long-term capex plans are in place, certainly your figures can be matched.
Okay. And what is your capex plan, sir, for the FY26-27?
Yeah, we are working on that. We are in discussion with our ministry, and we should be ready with maybe by end of Q3, we'll be able to make those plans, and probably in the next con call, we can give you detailed figures. We are in the process of making currently.
Thank you, sir. That's all from my side.
Thank you.
Thank you. The next question is from the line of Manoj from Equicrop Research. Please go ahead.
Sir, thank you for the opportunity. So my first question is about the metal bank. If we are going to have this 5-6 materials, we are going to store for a very long time. Is it going to involve substantial capital from our side, and will it be subsidized by any of the government departments, or it will be calculated in the cost by bidding for the contracts?
Yeah, the first answer is no. It is not going to be in the books of Mithani. And this is, as per MOU, it is a metal bank being established in Mithani's campus, owned by customers. Okay, owner is the customer, whoever our MOU partners, they are the customers, and the location is Mithani. Okay. And only infrastructure is Mithani's infrastructure. We are only facilitating the required infrastructure. And it is a customer-owned, Mithani-operated metal bank.
This is great news for us. I mean, it will not block any of our production plants, actually.
Absolutely. Absolutely, you are right. And there has been a long thinking in Ministry of Defence, and as advised by them, and as per our suggestions, this has been established, and soon, within 6 to 8 months' time, we will have the metal bank being installed within the Mithani's campus.
Yeah. So my second question is, what is the current capacity utilization across our facilities and businesses? And what is the optimum sale we can generate from the current capacity at the optimum level?
Yeah. So if you look at, capacity utilization, if I have to give you, we have multiple stages of operations. For processing of any material, we have melting. That is, we melt the material, then downstream processing, that is, we'll do forging of the material, rolling, hot rolling, cold rolling, wire drawing, and all these things. Depending on the product form that we are supplying, it will undergo a series of operations. So melt, we have sufficient capacities. Okay. And if you are selling castics, that is directly ingots, the process stops there. So we have 100% capacity utilization. If you go to forging, probably we are having 2 forge presses. There also we are having, wherever it is required for operating, we also go outside and get some of the things done. We outsource it. And of course, we have a white plate mill, we have other hot rolling mills and cold rolling mills. So depending on the product mix, whatever product we are processing, some of these equipments are used. So it all depends on the product mix that we are targeting, and accordingly the capacity utilization will be there.
Yeah. So my next question is, if you have to achieve, if you decide to achieve a turnover of 5,000 crores, I'm just asking, then what is the roadblock? Is it the demand? Is it the capability? Is it the source of supply? Or where is the bottleneck? Or is it the capex limitation? Where is the limitation actually if you have to achieve? And is there a potential to achieve this kind of turnover in the next 3, 4 years, 5 years?
Yeah. So it all depends on the orders. If enough orders are there, next roadblock or bottleneck will be the infrastructure availability. And the third thing is, of course, processing. Mithani is capable of making literally any type of LI. Okay, we have 500 grades of materials in our portfolio, and about 100 of them are aeronautical grades that are required for aero engines. We supply materials to ISRO for all the solid rocket motor boosters. We supply materials for all the missile programs, including BrahMos, Akash, which are used in Operation Sindoor. So it is not the question of capability. Capability exists. We have a very strong R&D team in Mithani. We have wealth of knowledge. We have process sheets for so many grades. It is only a question of infrastructure. If infrastructure is available, that is the reason previous question I also emphasized that we need to have some capex so that we can produce more. Okay, so our idea also is towards growth. How to grow at 20%, how to grow at higher levels, how to get. So orders are available. In fact, if you look at the exim data, something like 8,000 crores worth of super alloys and titanium alloys are being imported into the country. So there is enough requirement for the material. So it is only a question of having the right kind of infrastructure so that we can book the orders, even we can export the materials. I mean, there are enough people looking for orders in competitive market, and Mithani exported last year 10% of its revenue has come from exports itself. So enough opportunity is there. Certainly it's a bottleneck is the infrastructure. If we upgrade some of the equipment and some of the facilities if we create, these figures are possible. 5,000 crores, maybe it may take a little time, but it has to be in a progressive manner. So to start with, how to achieve, maybe we have to go towards 1,500, 2,000 crore, and slowly in a gradual manner, there is a significant possibility to increase in this area. And this is a very niche area, again, I want to tell you.
Mm-hmm. So if you have the money, or if somebody is willing to put in money, the government or somebody else, right? Say you are given 500 crore or 1,000 crores. Is there a potential to invest this kind of capex and accelerate the growth in a big way? I mean, what's the medium-term capex plan? Is it like 200-300 crore, 500 crore, or even more than that?
Yeah, no, I agree. Actually, okay, we will be we are currently working out. By end of Q3, we will be able to give you the correct figures. We are in the process of making the plans to what are the right kind of equipment to put and where we are going out for downloading of our facilities. So that capex plan we will be sharing probably in the next conference call. Yes, as you told, infrastructure is required and we are in the process of doing that. And our ministry also is encouraging us to go ahead with this kind of thing. So we will do that.
Sir, only the last question, comment, whatever you say or the suggestion. If I understand, in terms of the business potential, it is huge. You said 8,000 crores worth of imports are happening. There's a significant export potential, right? So the only thing is, instead of we thinking about 10-15% growth or something, we need to fix a vision. Somewhere, somebody has to fix a vision saying that, okay, we want to achieve 5,000 crores in the next 7 years or 6 years. And then work backwards of what is needed, what capabilities, what money, what facilities, what sustainability. And that needs to be planned. I don't think so. The kind of capability and kind of things we have, we need to talk about 10-15% growth. I think it needs to happen from a different angle. And if that happens, then there will be a push for doing a lot of things. So I genuinely hope that over the next couple of quarters, we should have a lot more clarity and significant push towards the growth over the next 5-7 years. I sincerely hope, sir. And hope to meet you sometime soon, sir. Because we see significant potential in our business actually.
Yes, thank you very much. Actually, you are most welcome to Midhani. Anytime you can come and visit our plant. And we are also doing visioning exercise. Already we are into the exercise of 2030 and 2047. And we are a significant partner in Viksit Bharat proposed by Honorable Prime Minister. So how to take the company forward is one of the most important targets currently we are working. And certainly in the coming quarter or two, we'll be able to share our futuristic plans. Yes, this we'll do, and we look forward to your visit. Thank you.
Thank you, sir. Thank you very much for the opportunity.
Thank you. A reminder to all the participants that you may press star and one to ask a question. The next follow-up question is from the line of Henel from Equiqua. Please go ahead.
Thank you for the opportunity again. So some questions related to the space part. So we had done a consortium order a few years back on the PSLV side for ISRO. So are we empaneled for PSLV, GSLV, SSLV and LVM3 projects, or is there something where is there some part where we are not actually there?
Your question is absolutely right. And if you remember, we are a part of ISRO. Okay, we are catering right from the first PSLV onwards. Midhani's material is what you see in when the launch vehicle lifts, whether it is PSLV, GSLV or LVM3 or any of these SSLVs, you see the Midhani's rocket motor casing, that is what gets ignited on the ground. Midhani has been a partner of ISRO for last more than 40 years. So we have been supplying, and for all these things, not only for solid rocket boosters, we also supply materials for liquid engines, that is Vikas engine. We supply materials for cryogenic engine, both for GSLV Mark II and Mark III. And we supply materials for semi-cryogenic engine. And we are looking forward. ISRO is going with great guns for next generation launch vehicle, having locksmith engine. We will be part of that one. And SSLV, whatever order has been given to HAL, we will be part of that. Every ISRO launch vehicle and satellite, Midhani materials will be there.
Okay. So the Gaganyaan mission and the human assisted mission, we will also be a part of that very strategic missions, right?
Absolutely. In Gaganyaan mission, all solid rocket boosters, that margin steel, whatever is produced in Midhani is being used. In fact, that is in one of the previous questions I told, the rigorous quality checks that are done by ISRO for Gaganyaan mission, that they don't permit us to use a scrap because it has to be human-rated vehicle. Yeah, so that human-rated vehicle, the quality controls are so high, so we cannot have any deviation in the quality. And meeting their requirements, we are very proud. Midhani is very proud to meet the human requirements for ISRO's Gaganyaan program. We collaborate closely with them, and in fact, we are the major suppliers of materials for ISRO in Gaganyaan program.
Okay. So also we were also trying to put a metallic powder plant as an input substitute. So how do you see this particular segment? Is it going to be order specific orders for the powder unit, or is it going to be on a consumable basis? So the orders will be continuously recurring from your plant.
Yeah. Actually, if I have to elaborate on this, metal powder project is coming from additive manufacturing industry. Midhani has been making the alloys like super alloys or titanium alloys for so many years. Last 40 years we have been melting. We are masters in making the alloys. Now, one of the branches, this is the one approach, that is making a big block and machining to realize a component. Recently, additive manufacturing industry is growing at a very fast pace. So, in order to meet the additive manufacturing industry requirement, currently all the powders, particularly titanium and super alloy powders, are imported. India is not having capability to make these powders as an input material for additive manufacturing, that is 3D printing. Now, since Midhani already has a lot of expertise in making these alloys, it is only a question of converting the alloy liquid metal into powder. So we have already initiated, there is a purchase order. Okay, so we are pursuing with the company to supply this equipment. With this, the advantage is Midhani is also producing metal powders for additive manufacturing. and there is a huge potential. All powders are getting imported. So first of all, we can cater to the all markets within the country, and there is a huge export potential for powders also. So with this idea only, this initiative was taken, and we hope that we will be able to establish, so this additive manufacturing powder making facility, maybe in the coming 6 months, we should be able to do. Already PO is placed, so there are some hiccups. So we are expecting that the problems will be sorted out and we'll be able to install the facility. Yes.
So this would provide significant skin in the game for us, because a lot of aerospace manufacturers are actually looking at 3D printing for very precision construction side. So with this, I think so the aerospace will be a very big vertical, and I think so aerospace is the most profitable vertical for us among all the verticals, if I'm not mistaken. Okay. So if you could also give some more understanding on the MOU that we signed with AD and the Aero India 2025 Summit on the MDN 100 grade, alloy grade. So what is the actual use case? And we've also been supplying some aeronautical grade alloys for the Mark II program. So since the Mark II program is, what is the process out there also?
Last sentence I could not hear. Can you repeat?
So we were also empaneled to provide some aeronautical grade alloys for the Tejas Mark II program. But since the program is a little delayed and it's still some time to pick up, I mean, what's your understanding out there?
Okay. See, actually, we are the company producing materials for the Tejas Mark II. Yes, there are number of grades in that, and we have already started processing these materials. There are significant number of steel super alloys and titanium alloys in this, and they have to be, first of all, type tested and qualified, and we are in the process of doing that. And we are also, whatever you mentioned under Aero India, those grades we are currently producing, yes.
Okay. So, and lastly, we had also alluded to a 700 plus crore order in Q2. But if I just do the math, I think it's about 250 crores that we've actually got and 300 crores that we got in October. So there is actually the disconnect. Are the orders deferred, or are we still yet to receive the tenders because the tender bids have not been opened?
No, another 500 crores orders in advanced stage. We are expecting before March. Over and above whatever we already booked around 990 plus, we are expecting another 500 crores of orders from defense and navy sector before March to 26.
Okay. So, and for Abed project, would you need
a... Yes, but should you have any follow-up question, please rejoin the queue.
Sure.
Thank you. The next question is from the line of Rakesh Roy from Boring AMC. Please go ahead.
Yeah, sir, my first question regarding, can you guide us about how much order book we are expecting at the end of March FY26? Because as you say, you are in second half, you will do nearby 900 CR revenue or full year 1300 CR. So our total order book is nearby 2000. So out of 2900 we completed. So how much order book we are expecting and at the end of March?
Okay. No, presently we are having 220 crore order and another 500 crore already finalized. That makes around 2700 crore. Even 900 crore we do, it is going to be 1800 crore. Actually, we are thinking even some more order will come. The 1st April 2026, we expect at least 2000 crore opening balance will be their minimum. So that will be easy to plan even next year also.
Okay, right, sir. Right, sir. My next question, sir, as you say, bulletproof helmet, you take the COT from the IT in Mumbai. So this product will be made in Hyderabad facility or Rohtak facility? Or can you update on Rohtak facility? Any update on any order, new order from the armored vessel?
No, Rohtak facility, presently we are doing vehicle armoring and body armoring, some like a trial order we got it. Sir told that IIT Technology Abed also we are already made and it is under the testing and going on. Now already we have done around 12-13 crore in the first half, means until October, and we have another some 40 crore orders. So there is a good visibility and we are pursuing with some more order. So in maybe by end of the year, Rohtak will be doing much better than means initially whatever we are doing.
And to add to whatever our Director of Production and Marketing told, this Abase technology taken TOT from DRDO plus IIT Delhi, whatever we have signed and taken the technology transfer. This is a very, very niche technology, and we have already processed bulletproof jackets using this technology, and we have already tested. Ballistic testing also has been completed. So we are very much impressed with that, and we hope that we will get significant number of orders for Abase jacket.
Sir, any need for this for bulletproof jacket?
Yeah, if you recall, we are already into the business of making bulletproof jackets. We have a facility at Rosak which is making already this. So we have all the facilities, that is the facilities required. Okay, the SAP and HAP, whatever soft armor panel and hard armor panel and autoclaves, all the facilities are available, how to test them, how to raw material inspection, all these things are there. It is only the processing of these Abase jackets, there is a small differences are there, and we will be processing them as per the thing, and whatever capex required for that is small, and that is with internal funds we will be installing those equipment, and we should be able to get all these things, the Abase jackets within 6 months, everything will be made. So we are ready for getting orders for this particular jacket.
Great, sir. Yes. Last question, sir. Sir, any product we are supplying to shipbuilding, sir? Any our product is going to shipbuilding industry?
Yes, absolutely. We supply steels for all shipyards like Hindustan Shipyard. Okay, we are working with Mazagon Dock Limited for some of the indigenized steels. There are grades which are currently being imported. So we are discussing with them on indigenization of steel, and we'll be soon developing these steel grades. Henceforth, we'll not be in a position, we need to import these steels. Yes, with shipyards we are doing.
Okay, why I'm asking you, government is thirsting on the shipbuilding industry in India. So in that case, sir, how you looking, sir, this industry as growing in next 5 years, 6 years, and where we stand, sir?
Yeah, we expect significant orders for Midani. The advantage is whoever gets order will be getting the raw material order, because these steels are very, very, high-end steels, and these are not like the steels that are made in steel plants, conventional steel plants. These are all wide plates that go into wide and thick plates that go into the building of ship, and these are all very special grades, and majority of them are either German origin or French origin. So we have the capability to make these materials, and the more they grow, the more we grow. Okay, so the more number of orders they get for shipbuilding, and we will be getting correspondingly orders for raw materials.
Okay, so for shipbuilding, say specialist steel or super alloy, sir?
They don't use, some of the ships use titanium alloys because it is in sea water, but majority of the materials are steel.
Okay, right, sir. Yes, sir. Thank you, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Jyoti Singh from LIC. Please go ahead.
Hi, sir. Good morning.
Good morning.
Yeah. So my first question is pertaining to the exports. Since we are exporting to more than 20 countries, so what kind of opportunities are we seeing, and how do we plan to increase it going further from the current level?
Yeah, if you look at our exports, last year we have exported orders worth of 95 crores, about 94 crores. Okay, so currently we have already supplied to the tune of 21 crores. Okay, till now, till second half. And order book is around something like around 25 crore worth of order book is currently we are executing. This year we may a little fall short because total exports may be around 50 crores. One of the reasons why we are falling short is because there were some raw material constraints for processing of some of the titanium alloys. We need to import materials from abroad. Okay, so where we are having currently some geopolitical situation is not so good. So we are not getting some supply chain disruption was there. Deliberately, we have not booked some of the orders even though we've been approached. because the typical timeline for processing of, import order is about 3 to 4 months. They want material very quickly. Even the import of the materials may take 3-4 months, so we didn't want to unnecessarily enter into that. So deliberately we have not booked some of the orders. So, but there is significant potential. If you look at the super alloy and titanium alloys, we are competitive in the open market and we get orders by competition. So we can look once these things are settled, we should be able to make that 150 crore exports every year. And not only that, there is one more important point that I want to mention, that Midani is going for NATCAP certification, which is essential for export orders. So by Q4, we will be completing this NATCAP certification also, which will enable us to export the materials. So that will have all the certifications whatever are required by the export market. Okay, our foreign customers, they look for this certification and we will be completing by Q4.
Okay. Some second question is pertaining to your order book. If you can guide on the execution plan or timeline for your current order book in hand. Hello?
Timeline for executing the current order book. Okay, so currently we are having about 2,200 crores and we expect another, anyway we are moving towards something like, we should be able to complete by 12 to 18 months, whatever orders currently we are having.
Okay.
And some of the grades are developmental grades, so that longer time is for those developmental grades. Production grades will take not more than 12 months at the most.
Do we see any sort of in terms of reporting the raw material for the order book that we have, so that this can be executed on time?
Yeah.
Presently, except 1 or 2 raw materials, there is no much issues. We are already concurrently planning raw material procurement and we are planning already existing order book. Action plan is already initiated.
Okay. Yeah. Thank you, sir. The third question is based on your growth of a factory. If you can guide us on what are the current capacity utilization and what sort of revenue do we expect from the facility in the next couple of years?
Okay, as I told in previously, the capacity utilization depends on the products that we are supplying. So all the equipment will not be used for all the products. Okay, if it is only for ingots, only melt furnaces are required. If it is for wire and bar, electrodes or our welding wires, it needs significantly almost every equipment. So depending on the product mix that we are targeting, the capacity utilization will be there. For some of the products, you may not touch any of the existing infrastructure. So it depends currently the product mix that we are processing.
Okay. That's it from my side. Thank you so much for the detailed answer.
Thank you.
Thank you. The next question is from the line of Rishabh from RBSA Investment Manager, LLP. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. So just
Thank you.
Hopping on to earlier participation question, you mentioned that demand is not an issue, capability is not an issue, but just on infrastructure side, we are falling short. So just want to understand, sir, what steps have you taken in the last 2 years, including the raw material availability which is imported, that would ensure that going forward this is not a big issue for us. And how do we plan to manage this? Given maybe this may be once in a decade opportunity for companies like us, we should be going all in to capitalize.
Yes. So one of the things that we are doing is for raw material security. As I've informed, we are setting up a metal bank, National Strategic Materials Reserve, which will take care of at least major things. Because if any supply chain disruption is there, even for any of the raw materials that go into making of alloy, even when one material is not available, that will be a problem. So this is the first initiative. To your question, what initiatives you have taken in the last 2 years for that? Creation of metal bank is one of the initiatives that is taken, and hopefully within 6 months we should be in a position to establish this facility in our campus. With respect to CapEx, your another question, what are the things that you are doing? CapEx, we have been continuously trying to install. So, in last so many years, so many new equipments have been added. But in the core area where we need the forging, so we are in a discussion to have some very important equipment, okay, to process the forging line. So there we are going to install higher capacity one to meet the next maybe 15 years kind of thing. We are having 15-20 years. We should be in a position to make continuously grow. So that kind of equipments we are planning to put. We'll be in a position to give detailed figures in end of Q3 or Q4. And seriously, we are thinking about what kind of machines are required. Okay, so it is there. So there is a good plan. We are also doing a plan for 2030 and 2047. So we should be in a position to get more orders, execute more orders, increase the top line, and grow at a pace maybe 10 to 20%. That is the target that we are currently thinking of on a very conservative note.
And so you earlier mentioned in our earlier calls that we are in the process of empowerment with the global aero engine majors. So what stage are we in that empowerment, and how long before we see orders from them?
Yeah, so some of our foreign people, they are auditing our facilities, and some of them have already completed the second level of audit. And once they are satisfied and give a certification with this NADCAP and all, we should be in a position to get orders from them. Okay, once they start giving orders, we'll get good orders for exports. So once they complete certification of our plant, we will be able to get.
This process will take 1 year or so? Or
No. For some of the people, we are towards maybe within 6 months we should be able to complete.
Okay. And so we understand that superalloys is a significant portion of our revenue. Do you share the breakup, maybe the titanium or the critical component alloys? How much is it as a percentage of our revenue? Do we share the breakup?
Yeah,
21%.
Yeah. So if I have to give breakup, just a minute, I can share the details. So if you look at our superalloy revenue, will be 21% of the total revenue. Titanium alloy will be 19%. Margin steel 15%. Special steels, including the steels for naval and other applications, and even that is through applications, it will be 37%. That is a very big chunk. All other grades will be about 8%. Yeah.
Okay. And so 5 years down the line, how does this mix change for us? Given what we are planning, maybe I think we are planning to go into more high value-added areas and different industries. So how does this mix change, and how does it help the margin profile?
Yeah, margin profile to share with superalloy margins will be little higher. Steel margins will be higher.
Except for all alloys will try to maintain same level of.
Like now, overall 23% EBITDAs can be expected. 23%.
Okay, understood. Okay. And sir, in this, there's one more company called PTC Industries. Do we compete with them in any products, or I believe capability-wise would be at par with them, right? Or where do we stand, sir?
Yeah, I mean, basically, we are having steel superalloys and titanium alloys. So they are also putting up facilities. There is enough market for everyone to grow. Okay, it is not that competition. There is significant business. I told you previously there is 8,000 crore worth of materials are getting imported. The cake is big, so people have opportunity to participate and get. Yes, they are also doing. I mean, coming up with a lot of new facilities.
Okay, thank you, sir. Wish you all the best.
Yeah. Thank you so much. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. Now we have reached to the end of the question and answer session. I now hand the conference over to the management for the closing comments.
Yeah, so thank you. It has been a fabulous meeting. I think we had for nearly 1 hour, and I think many of the questions I hope that we have given satisfactory answers, and we hope to grow, and whatever little decline was there in the Q2 performance due to non-booking of some of the products in our WIP, I think we'll be able to liquidate them in the third quarter, and we will be moving forward for the targeted 1,300 crore sales, whatever we have told that during Q1 time. So thank you very much. Thank you all for joining today's meeting.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you.